Investors, we are officially midway through September, coming up on closing out 2024, which is insane to think about, but ultimately means that yours truly has been busy with major portfolio shifts to ultimately set me up for an even better 2025. Now today, I have major news for you on a personal front, huge news in terms of a recent portfolio decision, and of course, all the investment moves I've made this past week to share with you, so let's get right to it. So first and foremost, I want to start with some personal news. News that actually I hope brings you a lot of joy. As of this past week, I officially made the decision to quit my corporate job and go full-time here on YouTube, creating insightful videos for all of you, whether it be stock ideas, macro insights, wealth mindset, or masters of the market chats. I am now fully fueled on all cylinders to deliver more. And while that may be incredibly exciting, I'm going to humble myself right now, right here for all of you, and just say that I need your help joining me here on the channel by subscribing to ultimately let me know that I did in fact make the right decision. Of course, I see this channel as yours as well, so comment down below with what you want to see more of on this channel and I'll get to it, as I see this entire YouTube gig as the means to stick to my personal mission of just helping others achieve their goals, financially speaking or in life. This now means that we're all going to be spending a lot more time together. With that, I now want to just get right into it with some macro news to put on your agenda when it comes to the Federal Reserve's next FOMC meeting, which is scheduled for this upcoming week, commencing on the 17th. This meeting is huge, considering that it's very likely that we could actually get our very first interest rate cut, and that is what we've all been waiting for. But as I've been sharing, I believe that this move could spark very bullish activity on all fronts, which is actually why I think we had quite a green week this past week, as investors have been prepping themselves for the potential first rate cut. Now, portfolio wise, let's click into Gitcoin, which is how I've been tracking my portfolio, and just a portfolio tracker that I highly recommend exploring if you're not already tracking your investments. It has just been truly a game changer for me. But we can see here that we started off the week in the red before steadily climbing back into the green. The S&P just continues to build momentum, and that's giving way to my portfolio value now sitting at $205,761.55 as of this recording. But now I want to jump back on with all of you before I go any deeper into this deep dive to share that this past week, based on how I see the market moving, I really needed to get going on putting money where my mouth is. So I ended up selling out of one position entirely and depositing another $1,000 or so worth of cash into my settlement fund, but we'll click back here into Gitcoin to cover it all. I want to direct your attention to the right-hand side of the screen here underneath allocation, where we can get my portfolio breakdown, to which I hope week by week you're actually tracking and noticing that I'm continuously balancing out my portfolio another notch down here, with only 47.9% of my portfolio invested now into individual stocks, a growing allocation worth of ETFs coming in now at 27.4%, mutual funds now coming in at 14.5% of my portfolio's weight, and once again this sizable $20,000 cash position coming in roughly at 10% of my portfolio. To which I want to reiterate the power of just having your money in a settlement fund in the first place, that as of this video, based on higher interest rates, is shelling out over 5% worth of monthly distributions, so that just far outbeats having my money sitting in a bank account. Now, sector-wise, we remain tech heavy, and I'm going to get to it here and showing you through that I have 47.5% of my portfolio still invested directly into tech, but as I shared, I continue to balance out my portfolio, keeping it safer with healthcare coming in at 11.8% of the portfolio's weight, and then we have other and consumer discretionary coming in at just over 10% before we tap into industrials, financials, real estate, and slivers of other sectors. Now, I'm actually going to go ahead and click into positions here and show you even more so you can really understand what's underneath the hood of my portfolio. Vanguard's Total Stock Market Admiral Shares Fund, ticker symbol VTSAX, remains the largest position, which I would really like to consolidate with its parent fund before the end of the year, but that's nearly $30,000 worth of my portfolio, and I consider it a part of my investment foundation. Apple still remains my largest individual holding, coming in at roughly 12% there of my portfolio's weight. Then we have the parent fund fund itself of VTSAX here with Vanguard's total stock market fund, ticker symbol VTI, at 11.6% of the fund's weight. And here we are with a major shift that has taken place. Vanguard's information technology fund, ticker symbol VGT, just popped above 10.7% of my portfolio. That's roughly $22,000 invested into this fund. I'm going to speak about this one later on. But then we have a cash position here, of course, that keeps growing, now at $20,845, growing weekly. Another big player, almost out of left field, is Alphabet, now making up nearly 20,000% of my portfolio as well at 9.7%. Before we get into more safety with Johnson & Johnson at 8% of my fund's weight, even more safety here with Vanguard's S&P fund, ticker symbol VOO, now accounting for roughly 5% of my portfolio. And then we have Realty Income, Visa, Lockheed Martin, and some other stocks that I have there in focus. Now, have your own opinion about my investment portfolio and how I'm investing, but it works for me. And a matter of fact, according to Gitcoin's AI analysis, here I actually have built the exact portfolio that I initially set out to build. As per Gitcoin, we can see that I'm well diversified, scoring a perfect 10 out of 10, thus creating a nice buffer of safety from volatility. My portfolio is not so risky there, scoring a 9 out of 10. As we can see when it comes to fees, something that I think we all often overlook, I score a 9 out of 10, meaning I'm paying next to nothing to actually have the portfolio that I have. And actually this 6 out of 10 when it comes to macros is what I want to see, which means that based on our macro conditions, the positions that I hold in my portfolio are prone to take a hit, alerting me to actually continue to just dollar cost average into some of these positions, which is exactly what I continue to do. Now, in terms of dividends, I already know, thanks to Gitcoin's forecast, that September is going to be one heck of a lucrative month with ETF distributions hitting my account. Then we have stocks like McDonald's, Johnson & Johnson, Realty Income all paying me out as well. So stay tuned for all the updates. But let's keep on scrolling down here to finally see some of my moves from this past week, from buying more shares of an ETF and the big axe cut to a healthcare gem, Medtronic, which I'll join you now once again to discuss in greater detail right on screen with you. First, I just want to say that pulling the trigger on cutting Medtronic out of my portfolio was not easy. I wrestled with this idea for quite some time now, but ultimately I'm committing to going all in on my own words of saying that I'm going to have an insanely concentrated portfolio. Now, I do believe that less is truly more, but this move is not to say that Medtronic is not a phenomenal dividend investment. I do believe it is. The reality is that each and every one of us has to come to terms with our investment profile and our goals. So while Medtronic is a moat-worthy healthcare company, in my opinion, with products that we need, from pacemakers to even blood analyzers for diabetics, at this point in my life, at 30 years old, I just want to focus on more dividend growth stocks and growth power players, as I like to call them, for the sake of total return. But look, if you're specifically seeking reliability, Medtronic delivers with exceptional metrics here on the income statement, year over year bringing in billions of dollars despite the economic context that we've been living in, also keeping their balance sheet mighty clean. As we can see, assets are way over liabilities year over year. And right now on the year, if we scroll up, it's up by 8%. Clicking into the 5-year, we could see that we are in the red, meaning interest rate cuts, when they actually happen, will boost Medtronic, in my opinion, and it will likely rebound past $130. But overall, the max view here, we can just see that it has been a tremendous healthcare player in the industry for a long while. Now, dividend-wise, here's exactly why it was hard to chop out of my portfolio. It comes in at a 3.14% dividend yield, a 46-year track record, and actually a quite attractive growth rate here of 12% over the last 20 years. But remaining squarely focused on my core positions, and Medtronic not in the running, I sold out to ultimately put nearly $2,000 back in my pocket to deploy elsewhere. Now, thanks to brand new antitrust lawsuits filed against Alphabet, it was just way too hard to pass up Google this past week, and I said I would shift gears after 100 shares, but here I am now with 128 total shares after buying 3 more shares, working out to $448.35. And as for the all negative news headlines that keep coming out with these lawsuits, investors give it 2 years, 5 years plus, and this will all be a laughable moment. But one to capitalize on if you're looking for a serious growth player for your portfolio, and a dividend player as well here, with Google's dividend yield coming in at 0.52%. Now, this past week, thanks to tech being in the red at the start of the week, I actually redirected a purchase that I typically make into Vanguard's S&P fund, ticker symbol VOO, and instead snagged a share of Vanguard's technology fund, ticker symbol VGT, thus buying one more share for $542.96, as I see this ETF as a force not to be reckoned with over the long span of time in our tech-oriented future, which ultimately means I spent a grand total this past week of $991.31. Not as much as I typically do, but given the upcoming FOMC meeting and a potential rate cut, well, I am just holding tight here before making any crazy moves. I'm cautiously optimistic and making the moves that I see fit. With that, let me know the investment moves that you've been making this past week, whether you've been buying anything, selling out of positions, or just sitting tight for what Jerome Powell has to say and our future to come. Comment down below to let me know all your thoughts. Be sure you're subscribed to the channel, and thanks to YouTube knowing exactly what you're looking for, well, you could just catch the next recommended video right here. And with that, we'll catch you in the next one.